Yo, what's going on, guys? Welcome back to a new video. I hope that you're all doing well. Within today's video, we're going to be breaking down the past week that we have just had, price action, okay? So today's Friday, bank holiday, of course. Markets are closed today, okay? So we're going to be going through Monday, Tuesday, Wednesday, and Thursday's price action. I'm going to be showing you guys how the week played out and how you could have capitalized on some of the moves that we had intraday and intra-week, okay? So first things first, 4-hour time frame, okay? Every time we come into a new week, we want to be looking for a monthly cycle sequential SMT to frame our bias for the week and even the following week and even the week after, okay? So in this example, you can see we didn't actually run above previous week high on any asset, okay? So no bearish monthly cycle sequential SMT and of course no bullish monthly cycle sequential SMT, okay? So when this happens, you want to then drop down to the next highest time frame cycle available, okay? So nothing on the monthly cycle, so therefore we can drop down to the weekly cycle and then we can look for that weekly manipulation, okay? So in this example here, Monday, Tuesday sequential SMT, you can see NQ fails to take out Monday's high, whereas if we take a look at YM, you can see Monday's high was actually taken out within Tuesday, okay? So ever so slightly, not like a large move above it, no closure above it, anything like that. However, it was just a small turtle soup, which then gave us that weekly cycle sequential SMT, okay? So once we've got this, we then want to wait for our change in state delivery, okay? So it's that most recent up close candle before the sequential SMT form. So if we take a look at YM, you can see it was formed on this bearish candle here at 10 a.m. And of course, when looking for a bearish scenario, we want to look for that final up close candle, okay? Because we want to see then a closure below it to create our order block potentially. So in this example here, 10 a.m. candle, unfortunately wasn't bullish. So we then look at the most recent bullish one, okay? So this 9 a.m. candle here, you then want to mark out the body or the wick. It really depends on how you want to do it. In this case here, it had no wick anyway. Price then proceeds to close below it, not within the same day, but within the day after, okay? So market open on Wednesday is when we get that change in the state delivery, okay? So once we get that change in the state, we can then expect the following quarter to give us that distribution, okay? So Monday, Tuesday, sequential SMT, Wednesday, distribution, and then Thursday, you can sort of see just traded within Wednesday's range, I guess. However, it did give a pretty nice short, which we will get into very soon. So yeah, so true week open, price runs above it on Tuesday, gives us that weekly cycle manipulation. Wednesday then gives us the distribution lower, and then Thursday again, like I said, just kind of trades within the range. So the way you could have traded Wednesday is we formed an end dog basically, okay? So at market open on Wednesday, we formed a huge end dog while also giving us that change in state delivery. And then what we had happen was if we drop down to the 4-hour, or go up to the 4-hour I should say, you can see the NQ failed to fill that end dog completely. Whereas if we take a look at ES, you can see that end dog was actually filled completely, okay? So same thing as like an SMT fill, as end dogs and NWOGs are gaps. We can look for that cracking correlation inside of it essentially. So ES fills its end dog completely, NQ fails to fill its end dog completely, okay? And also, when these two assets are filling their end dogs, you can see that YM is actually trading back into its order block, okay? So that hourly change in state delivery after the bearish weekly, YM trade back into it here, okay? So we've got many bearish cracks and correlations here, as well as price retracing back into that change in state delivery. And then if we go down to, or go up to the 4-hour I should say, you can see we formed a very nice bearish swing point, okay? So 2 a.m. candle on that 4-hour, rejecting from the end dog, closing back inside that previous candle's range, okay? So bearish swing point, candle formed there at 2 a.m. And then when we come into 6 a.m., the third candle of that swing point formation, you can easily anticipate sells, okay? Everything's lining up. You've already got that weekly cycle manipulation. You've got price rebalancing into the previous day's range, tagging into the end dog, tagging into the change in state delivery on one asset. So the 6 a.m. candle, super easy to trade, okay? So now what we can do is drop down to the 5-minute and we can look for our cracking correlation. So I already know there was nothing on the daily cycle. So like I said earlier, whenever you've got nothing on the higher time frame cycle, drop down to the next highest time frame cycle available, which in this case, nothing on the daily, drop down to the 90-minute, okay? So let's scan through. I haven't even checked this out yet myself either, so we can definitely check this out together. it looks like we got a 90-minute SMT there between Q1 and Q2. Okay, so as you can see here, YM taking out Q1's highs right there, and then if we take a look at NQ, you can see NQ failed to take out Q1's highs. Okay, so essentially we've got price rejecting from the end dog, expecting a bearish day. So all you really need is 1 or 2 bearish cracks to get you back in line with the order flow for the day. Okay, so essentially this is it. Just one 90-minute sequential SMT does the trick right here, and you can see it was formed at 7:45 during Q2, and then at 8:30 you can see price trades back higher here, forms a 5-minute PSP, and then if we go down to the microcycle, you can see that a microcycle sequential SMT formed also at the time of the news event, essentially. Okay, so 90-minute right before it, while rejecting from that end dog, and then if we see the 8:30 candle, I believe it was 8:32. Yeah, so not quite at the news release, but slightly after, which is still okay. Okay, so I believe this was Q2, Q3 microcycle sequential SMT, and keep in mind that this one actually formed between NQ and ES. Okay, so any cracks that form between NQ and ES will be a lot higher probability. Okay, so the fact that this one formed right after the news event told me, okay, this is clear manipulation. We've already got 2 stages. We've got price rejecting from the end dog. We had manipulation yesterday, expecting distribution today. If we take a look at the news calendar, you can see Wednesday 8:30 news. Okay, so we got that manipulation on the lower time frame, and it's also in line with our higher time frame drawn liquidity and bias. Okay, so you can see the low time frame runs higher, manipulates before then dropping lower. Okay, so essentially 8:30 news manipulation, price then continues lower, and then if we go to the 15-minute, you can see I believe we had a SMT fill here. So 9:30 did end up giving a retracement right here, as you can see. 15-minute PSP, I believe that was an SMT fill as well. So yeah, 9:30 ES fills this gap completely right here. NQ fails to fill it while also closing the 15-minute PSP, and the third candle offered a very nice short again. Okay, so remember, news will either manipulate or distribute, and then whatever the news does, 9:30 will often do the opposite. Okay, so in this case, 8:30 news manipulation, 9:30 did technically manipulate higher, but it was more of like a retracement basically, and then it did give you that distribution lower. Okay, and then from there, this was super unfortunate. I know a lot of people that got stopped out here. Basically, this was London lows, pretty clean target to have, and you can see we just slightly failed to take it out. Okay, and the reason behind this is, if we take a look at the news calendar again, 1:30 p.m. Fed Chair Powell speaks. Okay, so usually when you've got a larger news event in the PM session than in the AM session will tend to engineer liquidity to then get taken out during the PM session. Okay, so we did still have news. It did still offer a very nice move lower, which you could have 100% caught. However, it was out of my trading window. I trade at 9 AM, so unfortunately didn't catch this one here. But nevertheless, lows here engineered. Okay, so London lows, and then we created a very close value swing during the AM session before then back trading higher. As you guys can see, traded higher, and then if you look specifically at the time that those lows were taken, you can see 1:30. Okay, so we know that Fed Chair Powell starts speaking at 1:30. All these engineered lows, 1, 2, 3, even more here, right? And then finally 1:30, Powell starts speaking, boom. Okay, takes all those lows out. So there's always a lesson there, right? Like I said, if we have that larger news event in the PM session, or even if we've got a news event in the PM session and nothing in the AM session, then this usually will happen. Okay, because the move for the day won't really all happen in the AM session, and the PM session do nothing. Usually if there is news in PM, then you will get a pretty nice move within the PM session, and pretty nice target as well. If there's engineered lows or highs, then you know where price is heading towards pretty much. Okay, so this was Wednesday's price action. Personally, Monday and Tuesday I wouldn't have recommended trading, just due to the fact that we had no news on those days. Okay, so Monday, Tuesday, no news. We did get the manipulation for the week on Tuesday, which meant that Wednesday was our distribution. So if we didn't get manipulation on Tuesday, and also, by the way, manipulation is that weekly cycle sequential SMT. If we didn't have it on Tuesday, then we could have definitely anticipated it on Wednesday. However, because we already had it on Tuesday, Wednesday distributed, and then Thursday, it could have pulled back into the range, reversed technically, which it did a little bit, or it could have gave us a continuation. However, it didn't really give us any of those, to be honest. If we go to the hourly, you can see it basically was trading within the previous day's range. Okay, so not a high probability daily candle. However, just by looking at the daily candle for Wednesday, you can see here that it was pretty obvious, to me at least, the price did want to continue lower on Thursday. Okay, reason being is because this daily candle broke that previous day's low while also not really rejecting at all. Okay, and then we've also built up a lot of lows here. So basically my idea coming into Thursday was wait for an open high of the daily candle, stabbing into that previous daily candle's range, and then trading towards these drawn liquidities down here. Okay, so I believe it was a 4-hour PSP that we formed on Thursday. So you can see here at the end of Wednesday we did end up forming a bullish PSP on the 4-hour, which allowed us to retrace back up into the range ever so slightly, and then forming a bearish PSP. Okay, so once this bearish PSP formed, again at 2 a.m. So 2 a.m. 4-hour PSPs are super powerful because they give you insight on what the 6 a.m. candle is going to do, which essentially is the whole of the AM session. Okay, so if we form a bearish PSP at 2 a.m., we can expect the AM session, that 6 a.m. 4-hour candle, to be bearish essentially. Okay, so with this in mind, 4-hour PSP at 2 a.m., we can drop down to the hourly, we can find our true order block. Okay, so our true order block is that final up close candle within a bearish PSP, or the final down close candle within a bullish PSP. Okay, so in this case it was a bearish PSP, bearish swing point, so at 2 a.m. So from 2 a.m. to 5 a.m. we're looking for our final up closed hourly candle, which was this one here. And you can see price did actually take the high of it. Okay, so it took the high of it within this 8 a.m. candle here, but it did end up closing back inside of it and also forming a beautiful hourly swing point there. Okay, so again, third candle here, super easy to trade. And also on top of this, if we drop down to the 5-minute, we had something else. Okay, so we actually had a predefined sequential SMT right there. You can see ES as well, taking out that high, boom. And then YM was a little bit out of sync on Thursday, so it wasn't like the highest probability day by any means, but usually YM will lead the way. Okay, so after this huge drop, this made me think that, okay, NQ and ES probably are going to catch up, so I'm looking for a cracking correlation to form to get me back in line with whatever YM's doing essentially. Okay, so obviously Q1's highs all the way up here, whatever, doesn't really look clean. Okay, so you can see either way it's just a clear failure swing from YM. And then once we get this is our change in state delivery. Okay, so like I said earlier, that final up close candle that formed the sequential SMT, or if it's a bearish candle that formed it, then wait for the previous bullish candle. Okay, so in this example we did actually have the bullish candle forming the sequential SMT, beautiful rejection. Also that gave us the hourly rejection. Okay, and then you can see here at 9 a.m. we formed that change in state delivery. So we had the candle closure below the candle that formed the sequential SMT, and then like I said, the beautiful swing point inside of the true order block was right here. So I don't know if you guys know about this yet, but we can also look for our true order blocks inside of regular swing points. Okay, so there won't be as high probability because the PSP adds that extra cracking correlation, but any swing point there will still be a true order block inside of it. Okay, so this was the 8 o'clock candle. If we drop down to the 15-minute, we can look for our final up close candle from 8 a.m. till 8:45. Okay, so in this case this was the final up close one here, and you can see the 15-minute true order block and the hourly one, which is already outlined here, line up perfectly with each other, and also a predefined sequential SMT plus PSP as well, keep in mind, on the highs. Okay, so this whole area here is super reactive for price, and basically all I wanted to see was price trade into it either at 9:30 or slightly before it, and then form some sort of cracking correlation. Okay, so you can see here 9:15 candle does actually trade into it while forming another swing point inside of it. Okay, so the fractability of these true order blocks is insane. Every single swing point there will be a nice order block resting inside of it, okay? So price already traded into it, which is what I wanted to see at 9.15. So then if we drop down again to the 5 minute, as it's a 15-minute swing point, look for our final up close candle from 9.15 till 9.25. You can see this is it right here, okay? So the 9.20 candle, price then closes below it at 9.25, validating the true order block. And then you can see at 9.30, beautiful open high into the 5 minute true order block while rejecting from the higher time frame true order blocks. Predefined SMT on the highs, Q2 sequential SMT, Q3 distribution, okay? So super clean right here. Like I said, 9.30 opens up high into it and then beautiful run lower, okay? 5 minute bullish PSP on the lows, allow for a retrace back into that 5 minute true order block, and then again a very beautiful short from there, okay? Which I believe we also had a microcycle sequential SMT form the second time that we ran up into this true order block, okay? So let's take a look. Yep, so between Q2 and Q3, as you can see, YM taking out Q2 highs during Q3, and then once we take a look at NQ, Q2 highs all the way up here, Q3 value swing, okay? And then again, chain and state delivery, that final up close candle, closure below it, happened on the following candle, 9.55, price then trades into it at 9.56, back into it again at 10.01, before offering a very clean short lower, okay? So essentially, those were the best moves for the week. So the Wednesday one and the Thursday one. Reason being is because they're the only days with the news events, okay? So what you can do even is just only trade the days with the news events. As you can see, Monday, Tuesday, pretty lackluster. However, Wednesday and Thursday were the best days of the week, offering the cleanest setups, okay? And then you can see, obviously, we did pull back slightly on Thursday, back up into the range, because what we did was trade into this 4-hour PSP wick from the previous day, okay? So 4-hour PSP wick, 15-minute PSP right there. Also BPR right here, if it lets me draw it. Draw this out here. BPR inside that 4-hour wick, 15-minute PSP, and then 15-minute inversion. You see price closes above it, back below it a few times, chops up inside of it, then wicks into it and then trades higher. 15-minute PSP on the high, back on the low, back higher, okay? So PSP super important, PSP to PSP, okay? But yeah, guys, essentially that was how the whole entire week played out. Don't get me wrong, it wasn't the cleanest week by any means, because if we take a look at the weekly chart, you can see we did close back inside of that previous weekly candles range, okay? So usually you want to see the previous candles high taken or the previous candles low taken, which we didn't get any of this week, okay? What I was anticipating is potentially to get a bearish monthly cycle sequential SMT and also maybe a SMT fill on that weekly time frame, okay? Which unfortunately we didn't get. So that's what I said, we need to drop down to the next highest time frame available, next highest cycle available, sorry, which was the weekly cycle, and that's how you can navigate price if there's nothing on the higher time frame. Obviously overall we are still bearish downtrend, so look for those bearish SMTs to get you in line with the order flow. Wait for the lower time frame to get in sync with the higher time frame as well, from those 90s, the dailies, the micros, and then chain and state delivery, and then you can look for those very clean trades, okay? Also candle closures, super important. You can see PSP as well, I forgot to mention that. So not only did we get an SMT between these two candles, we also formed a PSP on that manipulation day. So swing point, third day, beautiful trade, stabs into the previous candle's range, delivers lower. Following day also delivers lower because this candle closed below this previous candle here, okay? So it broke below the range. This candle opened up high, stabbed into this candle. We got that 4-hour PSP, that 90-minute bearish SMT, and then we delivered lower again, okay? So yeah, that's pretty much the whole entire week summed up. Again, like I said, nothing really on Monday. Monday just traded higher. We got, oh no, sorry, this is Monday here. You can see we did get an MWOG, which I forgot to mention. You can see we did end up closing below when we formed that NDOG, okay? So trade back into the MWOG plus the NDOG, SMT fill within inside of the NDOG, and then trade lower from there, okay? But yeah, nothing really on Monday, pretty lackluster. Again, nothing really on Tuesday. However, Tuesday did end up forming that weekly manipulation, okay? So high of the week was formed by a weekly cycle, sequential SMT. Following day delivered lower, and then Thursday gave us that continuation lower again. Okay. So yeah, hopefully you guys found this video useful. If you would like to see more of these type of videos where I break down price, the entries that you could have taken, do let me know in the comments down below. Also, I would appreciate a like and a subscription. Other than that, socials and premium membership are linked down below in the description. So check those out, and yeah, take it easy guys. See you later.